Welcome to ForexTV.com's PM Exchange. It's Wednesday, December 12th. I'm Remy Hoagie. Today I'm joined by Boris Schlossberg, Senior Currency Strategist at dailyfx.com. Good afternoon, Boris.
Hi, great to be with you as always.
Thanks for coming on the show today.
My pleasure.
Well, in less than 24 hours after the Fed rate announcement, we got another surprise announcement from the Fed today. The Fed will be helping to ease credit crunch concerns and injecting more liquidity into the financial system. But this is in conjunction with 4 other central banks. So, Boris, I'd like to get your take on this, and did it come as a surprise?
Yes, I think the biggest component of the surprise was the fact that it was a coordinated action between the major central banks, as you noticed, between the ECB, the SNB, the BOE, and the Fed. And I think that gave it a lot more heft, and that's why you saw this very, very quick turnaround in the market from anti-carry, essentially risk aversion, back up to risk assumption after the news came out. And overall, it's probably a very constructive move for the market because it's exactly what needs to be done. We need to have the compression between the LIBOR rates and the repo rates come down as players basically stop worrying about the counterparty risk and begin to realize that while the financial crisis is certainly very serious, it is not detrimental to the system. And hopefully those rates should start to compress a little bit, and that should ease the risk tensions in the market.
And taking a look at the rate announcement yesterday, the market did show disappointment that the 25 basis point cut came for both the Fed funds rate as well as the discount rate, and we saw equities tumble. But in today's session, we saw equities advance in the morning session, and they're pairing gains. And as a result, what we saw in the yen is in today's session is quite a reversal from yesterday's late session. So going into the coming session, if you could give us your outlook for the yen.
Yeah, it's actually a very volatile market environment. It's very difficult to gauge. We generally think that given the fact that the bottom line action of the Fed was to lower rates, dollar yen should really come down a little bit because the rate differentials between the dollar and the yen are continuously starting to compress. So the overall fundamental force in dollar yen is to the downside. And these type of very sharp spikes to the upside are really a function of risk assumption, function of equity market performance. So overall, our bias is still to the downside, and we think 113 is the level of resistance at this point in the yen.
Okay, and while we're discussing the yen, in today's session, as the yen weakened, we saw the yen pull back against the euro as well. So for euro yen as well as the yen against the so-called commodity currencies of Aussie, CAD, and Kiwi, if you could briefly give us your forecast.
Yeah, there the situation is quite different. As a matter of fact, we're just completing our 2008 forecast, and one of the key differential themes that we're seeing is that while dollar yen itself is really not going to perform well in 2008 because of continuous pressure on the U.S. interest rates, euro yen and the calm dollar yen pairs, the Aussie yen and Kiwi yen, could do quite well in a global environment that's relatively supportive of the equity performance, mainly because on those currencies, there's very little chance there's going to be any kind of rate cuts. In fact, there is some possibility there'll be rate hikes out of any one of those central banks down the road. And of course, the carry trade thrives on the expansion of interest rate differentials. So in that sense, there's much more support on those currencies than versus the dollar.
Okay, and since we're on the topic of the commodity currencies, I just want to briefly touch on Aussie against the U.S. currency. In today's session, we saw the pair hit a high of 88.95, and it's now pulled back around 88.40 as U.S. equities have also paired gains. What's your forecast for the Aussie against the U.S. dollar?
Well, as you said, it's very contingent on equity market performance overall, but generally, the Aussie dollar has really held quite well against the dollar, and a lot of it is contingent on internal Aussie fundamentals. The question ahead for the Australian economy is, will it still maintain its torrid pace? Will the demand out of China maintain Australian economy so tight that the RBA may be forced to raise rates once again in Q1 of 2008? And there's a strong chance. Overnight, we had Chinese retail sales spike to their highest level ever, over 18%, suggesting that Chinese economy is still in a very, very robust growth phase. And as China goes, in many ways, so does Australia, and that gives us more credibility to the idea of them raising rates going forward.
Okay, Boris, 2 currency pairs we haven't touched on in the majors include euro-dollar as well as sterling dollar. And as we head into year-end, we're going to be seeing thinner liquidity. But for euro-dollar, as it stands right now, What's your forecast?
The euro dollar presents an interesting dilemma as we go into the year end, because on a fundamental basis, we think it's pretty much going to range between this 145, 148 range. However, as you mentioned before, it's very vulnerable to very sharp stop running runs during this very thin liquidity time in Christmas. The currency market tends to completely shut down during Christmas and New Year's, and therefore any kind of exogenous economic shock makes it very vulnerable to a run either way. So we don't rule it out, but generally we tend to think that it's going to stay pretty much stationary within this range given the current economic conditions as they stand.
Okay, and Boris, moving on to the sterling against the U.S. dollar. In today's session, after hitting a high of 2.0580, we've seen sterling pull back against the dollar. So if you could give us your forecast for the sterling, both from a technical and fundamental perspective.
Well, sterling had all sorts of internal issues today. During the London fix, there apparently was a wrong way order for about $500 million worth of sterling, which created this havoc in sterling that ran it all the way up to 205 and then quickly receded back. But overall, the news out of UK has been relatively benign. For the time being, BOE cut rates by 25 basis points, so that's weight on the sterling. We think, again, the bias on the sterling is to the downside, given that news. But there hasn't been any indication that BOE is going to cut rates any further, given the economic situation as it stands. So we think this 202, 206 range is pretty much going to hold in sterling.
Okay, and while we're on the topic of central banks and currencies, tomorrow we do have the Swiss National Bank coming out with their rate decision. So, Boris, do you expect them to stay on hold? And if you could tell us what this means for the Swissy.
Generally, SNB tends to be a conservative bank and it tends to shadow the ECB. So we believe the consensus view that they will not raise rates, although there is good reason for them to do so. Swiss economic conditions have been superb. They have done well on the industrial side, consumer demand has been strong, and they've really been benefiting from the growth in Europe and the lower exchange rates of the Swissy that has really driven their economy forward quite well. And they can well afford a 25 basis point hike. However, we think they'll probably hold off until Q1 of 2008, given the credit crunch conditions that persist all across the region. And I think that's going to be the story for the Swiss.
Okay, and last but not least, before we wrap it up, tomorrow in the New York morning session, we have retail sales coming out as well as PPI. And we do have another bit of inflation data coming out on Friday with CPI. So, Boris, if you could tell us what Forex traders need to be watching in the coming sessions.
We think both PPI and CPI are going to be hot, given the relatively high energy costs that have been flowing through the system. So there's a chance, and food costs and other areas, that there's a chance there for an upside surprise on inflation data. However, the key for us is going to be the retail sales data, because in order for the U.S. economy, in order for the bullish view of the U.S. economy to persist, the consumer needs to remain viable. And as long as retail sales are positive, they don't necessarily have to be very strong, but just as long as they're positive, that will maintain the pro-dollar view that most of the bullish consensus has at this point. If, however, there's a contraction in retail sales, then again, talk of another 25 basis point cut in January will come right back on the table, more pressure on the dollar. And it's quite possible, under those conditions, we could see 150 euro dollar before the year end, irrespective of various technical conditions that we see in the market.
Okay, Boris, thank you very much for coming on the show today.
Thank you very much. It's great to be here.
This has been your Forex News with Boris Schlossberg from dailyfx.com. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended another volatile session in positive territory. After selling off in the previous session, the major indexes rallied at the opening bell. But this came after the Fed Reserve's plan to ease the global credit crisis. By the end of the session, stocks had paired earlier gains. The Fed announced its plan to create a temporary auction facility for funding banks in conjunction with the ECB, BOE, BOC, as well as the SNB. And in U.S. economic data, which took a backseat in the session, the Department of Commerce said the U.S. trade deficit widened to $57.8 billion in October from a revised $57.1 billion in September. Meanwhile, the Labor Department said that import prices rose 2.7% in November, following a revised 1.4% increase in October. At the closing bell, the Dow Jones Industrial Average advanced 41.13 points, ending at 13,473.90. The tech-heavy Nasdaq gained 18.79 to close at 2,671.14, and the S&P 500 added nearly 9 points, closing up at 1,486.59. In the fixed income market, U.S. Treasury bonds tumbled today after the Fed announced its new plan to inject liquidity into the financial markets. The benchmark 10-year Treasury note fell with its yield up sharply at 4.14% from 3.97% late Tuesday. The 30-year bond plunged with its yield at 4.58% from 4.47% late yesterday. And the 2-year note fell with its yield at 3.19% from 2.92% late Tuesday. And in energy, NYMEX crude oil futures rallied in today's session, gaining almost 5% on the day. Futures closed above $94 a barrel after an intraday high of $94.85 a barrel. Earlier today, the EIA reported that U.S. crude inventories fell for the fourth straight week, down 700,000 barrels in the week ended December 7th. Meanwhile, the API said U.S. crude inventories rose by 1.4 million barrels. At the end of today's NYMEX session, January crude surged $4.37 to close at $94.39 a barrel. Also in today's EIA petroleum data, U.S. gasoline supplies rose by 1.6 million barrels. January RBOB gasoline added 12.14 cents on the day, closing at $2.4128 a gallon. Also, the EIA reported that distillate stocks fell by 800,000 barrels. January heating oil gained 12.02 cents on the day, closing at $2.6432 a gallon. Meanwhile, January nat gas advanced 32.3 cents, closing at $7.408 per million BTU. The EIA and API will release nat gas inventory data tomorrow morning at 10:30 a.m. Eastern. Over in the metals complex, gold futures ended with a slight gain after falling under $800 a barrel in post-FOMC after-hours trade yesterday. At the end of today's session, February gold added $1.70 to close at $818.80 an ounce. Meanwhile, in other metals, March silver fell 4 cents, closing at $14.0825 an ounce. December copper fell 4.15 cents, closing at $3.0160 a pound. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.